Interview is a firm links Australia with Asia, and a firm that I love. Okay, today I have three distinguished panelists with me. Because we have only 25 minutes, so I'll run this pretty quick. So first, can you introduce you guys, yourself, your experience, your organization, and what attracted you to the ENR sector and ENR-related investment sectors in 45 minutes, please? So Owen, can I ask you to start first?
Hello, I'm Owen Hegarty from EMR Capital. We are a mining private equity group. I'm the executive chairman. Our managing director is over here, Jason Zhang. We also come in numbers, we hunt in packs. We have Tony Manini is here also, Damien Pearson. We also have John Chonley coming later. And Rob Bailey is here too, one of our people. So we've got a lot of representation here. We're taking it very seriously, Bessie.
Thank you very much, Owen. And Lauren, can you introduce yourself and the organization, please?
Hi everyone, I'm Lauren McGregor, I'm from Resource Capital Funds. We're also a mining-focused private equity fund founded 25 years ago. We run a multi-fund strategy which allows us to invest across the entire risk spectrum from early stage exploration right through to production assets. We also have a mining technology fund, and we like to think we're pretty unique in our experience. We've invested in over 200 assets over the years that we've been operating, and we've exited 177 of those at the present time.
Thank you, Lauren. And last we have David Sun. Can I introduce your title to the audience, please? So David is the Managing Director of Sinosteel Australia, and also China Chamber of Commerce in Australia, Perth. He's the chairman of that organization.
Thank you, Bessie. Actually, Sinosteel was the first Chinese company did a money investment, which is since 1987. We had a joint venture with Rio Tinto. A joint venture called the China Joint Venture. Sinosteel has 40%, Rio has 60%. Rio was the operator, Sinosteel was the off-taker. So after 33 years, the joint venture produced 290 million tons high-grade iron ore, all through Sinosteel to China. So this was the first major money investment between China and Australia, and also was one of the most successful projects between the two countries. Also, we had another project called Midwest. In 2007, we spent $1.4 billion on a magnetite project called the Sinosteel Midwest project with 5 billion tons magnetite resource. So currently, we had an MOU with FMG, which is doing a joint study. Hopefully, we can develop that project, have another China joint venture. So myself has been Australia for more than 16 years. Started with China joint venture trainee in Parabadu. I spent 1 year as a trainee in the mine site, and looking back, time flies, already 16 years. Looking forward to share my experience with you. Thank you.
Thank you, David. So we'll start the questions now. So can I have my first question for Owen and Lauren, please? So is raising capital today harder than 20 years ago? Owen, do you want to?
Thank you, Bessie. And yes, one of the few people here old enough to be able to answer that question. It's never simple, it's never easy. The mining industry is that anyway, so raising capital is always quite tough. You need good projects and you need good people, and you need to be absolutely persistent with going through the whole exercise. Okay, so all of the usual sources of capital are available to you, including our very own private equity, and I should say that we are at this time deploying capital, so we do have availability and always interested in deploying. So you've got the usual range of debt and equity and capital markets available to you, Bessie, but you also have some other instruments these days, a little bit different to what we were able to see 20-something years ago type of thing. That includes streaming and royalties and crowdfunding, would you believe, as well. So there's actually quite a few of those different instruments out there now. So that makes a wider range. Doesn't mean that it's any easier, but it just makes it a wider range of capital availability. So we're available in terms of private equity, and we're deploying it only in the mining industry across multiple countries, multiple projects, certain commodities, and so on. So we're available, and Bessie, we always look for good people, good projects, and people who are absolutely committed to their projects and persistent in their endeavours. Thank you.
Thank you, Owen. Lauren, you want to add on something? Maybe talk about 5 years ago, or 20?
Yeah, I mean, look, 20 years ago, Resource Capital Funds was the only private equity fund focused on mining. So you know, there's not many of us around now, but there's a few, and we are also deploying capital. What we're seeing as well is I think 2021 was a massive year in the IPO markets for mining. This year is a little bit less, and I know Owen led one of the, or if not the biggest IPO last year. But I think what that means for junior miners is actually alternative finance is pushing down a little bit on the value chain. And I'd echo what Owen said in terms of greater options as well. So, you know, we're seeing governments step in now in a way that they weren't doing 20 years ago. We've got NAIF, we've got Clean Energy Finance Company here in Australia, and we're hearing the Biden administration also talking about funding for critical minerals. I think what we're also seeing, which is also new for the industry, is end users seeing the supply difficulties that are going to come down the track and actually being willing to finance projects to make sure that they can secure supply. So, you know, to echo what Owen said, I think for good projects, the capital is very much there. You know, in some cases for really great projects, the challenge is choosing the capital that suits your project and your objectives for the project best.
It's much more dynamics now, isn't it? Thank you very much. So let's talk about the other side of the equation. So we'll talk about fundraising now. How about investment? I would like to have the inputs from all of you. So what do you look for when investing in assets?
Okay, maybe I can start. I think for me, the first, most important thing is people. So when you're looking for investment, you better check the team first. I always believe if you have a good team, they can make a probably not perfect project become successful. And if you don't have a good team, even the perfect project, they can ruin the project. That's the experience we learned. You know, we believe that one of the success reason for our success with the joint venture with Rio is because we choose Rio Tinto, which is a reliable joint venture partner. That's the reason. The second thing we have to think, especially now, I think ESG is getting more and more important. Even for Chinese company, for the stock market listed company, ESG is become a compulsory requirement for a lot of investment. So that's a new trend. Another element I want to mention, you know, in Australia, when you do investment, especially money investment, in past we always considering the ore, the resource, the grade of the ore. But now we just found that actually the infrastructure is not a major issue. That's a problem we're facing for our Midwest project. We have probably the best magnetite project in Australia, but unfortunately we got railway. We don't have a railway in the port, so that's a big issue we are facing now. Thank you.
Lauren, add on anything? Like what do you look for when you
invest? So I think in terms of the fundamentals of the project, clearly we're looking at the ore body, the grade, the scale, generally conventional processing. We're thinking about the jurisdiction. We've got a deep technical team at Resource Capital Funds that's looking at all of those things. But I would absolutely echo what David said around the people and their ability to bring together a skilled team that are committed to the vision of the project. One thing that's slightly different about private equity is that we are active owners. And so we're looking for people that we think that we can work with, and also people that want to work with us, and projects where we think that we can bring value beyond just the check. I think in terms of ESG, that's obviously a very, very critical part now. It's not a fad. It is going to affect miners' access to capital. Glossy ESG reports, they're fine. They're a great communication tool. But specifically, what we're looking for is for mining companies to actually understand the most material issues for their project, and actually to be focused on real performance for ESG. Not just signing up to multiple standards and not really making a difference. I think as ESG evolves and people's understanding evolves, that transparency will become more and more important.
Right. So given the time, I think I'd like to move to the question that I'm personally interested the most, the concerns. So maybe, Owen, you can have this question. What are the investors' concerns currently?
Okay, let me start by saying what we look for in Project Bessie, and then you can work through that in terms of what the main concerns are, I suppose. So, as far as we're concerned, those things that we actually look for are very similar to what Lauren and David have been talking about here. It must have the tons, what we call the rule of 8. It must have the tons, it must have the scale, it must have the grade, i.e. must have the quality. Must have a conventional process, more or less. Don't want to be reinventing the wheel. Must have low cost, long life, lots of upside. Must have all of those things. And the long life is where you get sustainability and ESG into the system. Must be in a stable and secure domain. And we were talking about that a little bit earlier. Not all of the presenters take all of that on board. You must be able to obtain, retain, sustain your social license. And finally, it must be, as we say, eminently exitable. In other words, you want people who want your project and your share more than you do, type of thing. So you've got to make it very attractive. Okay, so Bessie, the question is, what are the main concerns there, I suppose? Well, apart from the short-term concerns, i.e. we are in somewhat of a downdraft. We're talking about record low raisings, record low IPOs, record low SPACs even. The SPAC market has disappeared as well. So it's difficult from that perspective. But out there longer term, I mean, our view very clear, multiple decades, good strong growth for commodities going out there for a long time. And you've now got the whole energy transition complex, energy transition thematic, energy transition dynamic all over the top of that. So that's the booster here in terms of getting the demand even higher for all of those commodities that we're involved in effectively. So that brings its own challenges, of course, and we are supply side people here. Right? We've got a little bit of demand amongst us all, but we're mainly supply-side people. So our main concerns really are access to land, access to capital, and being able to get on with the job to satisfy that strong demand.
Yeah, I agree. Lauren, do you want to add on something?
Yeah, look, I think in terms of concerns, I mean, I'd start off by saying Resource Capital Funds is very excited about the opportunity at the moment within the mining industry. We've been doing mining solely for 25 years. We've got no plans to change that. We think there's great opportunity for many of the reasons that Owen just touched on. I think decarbonisation, it's a 50-year trend. If you believe in that, you have to believe in mining. Similarly, I think the supply side, there's been chronic underinvestment, and investment is now needed if you're going to achieve some of the numbers in terms of production growth that the world requires to reach its goals. I guess in terms of some specific concerns that perhaps Owen hasn't touched on, obviously we're concerned around inflation. When we're looking at projects and really in our flagship fund, we look at projects that are going into production in the next 2 to 3 years. We're really looking at feasibility studies very closely to understand where construction costs and operating costs may be impacted. to ascertain whether that's going to impact the viability of those projects. And the other longer term thing, and it's back to people, it's the availability of skilled people. And I've already listened to a panel this morning which has touched on that being a real problem for Australia as a country and the mining industry globally. So that would be another concern that we have at the moment.
That's great. That's a very deep analysis of concerns. Let's dig deeper. So while we have David here, can I ask some questions in relation to the Chinese investment, please?
Yeah, I just can't wait to answer this question. It's also my favorite question. In my last 16 years, probably I've never had so many concerns in the last few years. I think mainly from the bilateral relationship. For a foreign investor, you do put your money in another country. You must be very concerned about the safety of your project. I think for Chinese investor, because of the bilateral relationship in the last few years, it's not as good as before. So there's a big concern. You can see from the recent joint report from the KPMG and the University of Sydney. Last year, the Chinese investment was only $778 million, which was 70% drop from $2.5 billion from 2022 and 2020. And in 2008, that number was $16 billion. So compared with the good time, this was nothing. I think that, for the bilateral relationship, it's really play a very important role for foreign investment. Another concern is the FIRB. Even FIRB always said their rejection rate was very low. But actually for the Chinese investment, a lot of cases actually FIRB just take such a long time. So the owner of the project have to just withdraw, give up, finally. And also every time when FIRB rejected one case, they were scared many cases, probably 10 cases potential deal will never happen. Especially for the medium and small investment. You spend a lot of money for the legal fee, for the due diligence, and you don't know whether you can get FIRB approval. So that's a big risk. I would rather FIRB have more transparency or even have a blacklist for the Chinese investor who just don't touch that area. So that's a big problem. Even I always remember when we had our chamber had a function with the leaders of the senior officer of the FIRB. When companies said one of the project approved in South Australia, and there's a new project in New South Wales was rejected. Exactly similar project, and I don't understand why this was rejected. And the senior officer of the FIRB said, "I understand, you don't understand, but that's our decision." So that's the problem.
Thank you very much. Can I have one more question for you, David? Can you forecast the trend of the Chinese investment in Australia for the next 5 years?
I wish I had a crystal ball. But I believe because the complementary economy between our two countries, I'm still very confident the investment will be getting more and more. Especially, we're always thinking because China is Australia's #1 trading partner. Nearly 1/3 of the trading, Australia trading to the world is to China. But actually, the investment from China was much smaller than we thought. It's actually only #8. USA, UK, Belgium, 3 countries together, more than 52%. But China is only 2%, 2.2%, even less than Luxembourg, a small country. So considering the complementary economy between our two countries, I think the potential is huge. We just need everybody working together to make our relationship getting better and better. You can see if the relationship gets better, a lot of investors from China will come to Australia, just because a lot of complementary between our two countries. Actually, because I'm working in the mining industry, I'm very optimistic. Otherwise, I won't approve any budget for drilling, because most drilling, the drilling will have nothing there. But we need to have a confident hope there will be very good future. That's why we do the drilling, a lot of time we're not successful, but when we're successful, we'll be huge success.
Let's have some faith. So I'm looking at the big, red sign, time's up. Can I ask my panelists to have a couple of sentences last, please? So from Owen?
Last word, last chance, Martel.
Last chance.
Okay, well, time's up. Never give up. Never give up in terms of the access to capital, good people, good projects, good persistence, and never give up. And I've been on all sides of the equation here, Bessie. You have to go down lots of different sort of foxholes to find the capital, but if you're persistent, got good people and good project, you know, you have to raise money at sort of giveaway prices, but you know, you've got to get the capital. That's the most important thing, because if you defer it and say, oh, we'll do it next year, we'll wait for the market to come back, then people will think you're more lifestyle than a project developer type of thing. Thank you, Bessie.
Thank you, Owen.
Thanks, Bessie. I would echo that. I think from RCS perspective, now is the time for mining. You know, we've got a great few years ahead of us. What I would say to junior mining companies out there is engage early with potential financiers. You know, we're always happy to meet with people who are, you know, ready to start thinking about where their capital is going to come from. And so, yeah, love to speak to some of you soon.
Thank you.
Just want to say, have a long-term view. Just like our joint venture with Rio Tinto, you know, in the last 33 years, we've been through a lot of ups and downs. Also for the bilateral relationship, I think maybe now is probably the best time. But just looking back, we had a very good time and also even worse time. So we really hope we can have a long-term view. Hope our bilateral relationship is getting better and better.
Thank you very much. I'd like to add one sentence. The deal was advised by SW. Thank you very much, guys. I hope you enjoy the conversation like I did. Thank you.